So yeah, Gabriel's going to give a presentation on basically the tokens on Bitcoin Cash, and hopefully also talk about a few of the other things that he's working on as well, like this Badger wallet and the Bitbox SDK that is now available on the bitcoin.com website. So go ahead, Gabriel. I'll hand it over to you now.
Awesome. Thank you so much. It's an honor to be here. I love your work, Hayden. Always have. CoinSpice is great. Keep it up. So I am going to be giving a presentation called the Tokambrian Explosion, the importance of tokens to Bitcoin Cash. I've given this presentation a few times, so it's likely that maybe some of the people in the room have seen it, but I've updated it just recently because so much has been happening. And I'm continuing to give this presentation because I still believe that we're at the very beginning of this Tokambrian explosion on Bitcoin Cash. And as it sort of evolves and happens, I think this talk resonates with people more and more. So as I said, I've updated. But I've got a lot going on here, so I'm just going to jump right in and breeze through everything. Feel free to cut me off at any time with questions or comments. I don't mind at all. All right, so here we go. So for the first 4 billion years on Earth, life was very, very simple. And then during this one period called the Cambrian, there was just this absolute explosion in different body types, which ultimately leads to all of the biodiversity that we see around us today. And I believe we're witnessing something similar in the Bitcoin Cash ecosystem regarding tokens. I believe that we're going to see an absolute explosion of different types of tokens, different token protocols. I think some of them will make sense in their niche and they will flourish. I think some of them won't make sense and they'll die off. The ones that do survive will ultimately compete against each other in a Darwinian fashion, and I think the ultimate outcome will be some very, very powerful token protocols on top of Bitcoin Cash. So quickly, just to get some terms so we're on the same page. So cryptocurrency is a standard currency which is used for the sole purpose of making or receiving payments on the blockchain. Of course, I listed Bitcoin Cash because in my opinion, that is in fact the best cryptocurrency out there as cash. But also we have tokens, and tokens are just a special kind of virtual currency that can represent an asset or utility. And you know, seemingly daily I get pushback on Reddit or Twitter or at meetups where people ask me, don't you realize that the killer app of Bitcoin is cash? And in my opinion, Bitcoin, or the cash layer and the token layer don't compete with each other. They complement each other. So tokens allow us to take everything we love about the blockchain, distributed, decentralized, peer-to-peer, permissionless, and it allows us to apply those properties to digital and real-world goods all around us. So, in typical fashion, Satoshi got it very right by making the first sort of token, if you will, on the entire network money, because that incentivizes the miners to validate transactions and secure the network. But now that we know that model works so well, we can take it and apply it to real world and virtual goods. So real quick, we'll just breeze through the past, how we got here. So in the beginning was Bitcoin, and Bitcoin was good. And because the Bitcoin script language allows you to write small pieces of metadata to the blockchain, it wasn't long after the creation of Bitcoin that developers realized that this metadata could be used to represent different assets as well as instructions for managing and trading those assets. So I have here on the right this really great video of Vitalik back in 2014 in Miami when he first introduced Ethereum. In fact, a lot of the stuff from the beginning part of my talk comes from this. If anybody wants the link, I can share that after the fact. But just to give a sense of some of the things that were sort of happening in the Bitcoin BTC ecosystem prior to Ethereum and that whole situation happening, all the way back in 2010. So, this is just a year or two after the creation of Bitcoin, after the white paper. You see the emergence of name coins. So the idea here being, if I go to my web browser today and I type in bitcoin.com, it's going to hit a DNS server, and that server is going to give me back the IP address of the machine out there on the web, which is going to serve up the assets at bitcoin.com. What if we could do that in a decentralized way and remove the middleman and the single point of failure? And so as far as I can pull out of the Bitcoin talk logs and stuff like that, all the way back in 2010, Satoshi was brainstorming with somebody named Vincent, if I remember correctly, to create Namecoin specifically for this. So to have a blockchain that was just a key value store. Around 2011, pardon me, around 2011, we see the idea of escrow transactions. So the way this works is, imagine I have a Bitcoin miner and you have Bitcoin, and we want to you want to buy it from me, basically. We don't know each other. We've never met. We're in different parts of the world. We can create a 2 of 3 multi-sig address. I can have a key, you can have a key, and we can bring in a third-party arbiter, and she can have a key, and I can send you my Bitcoin miner. If it shows up and you're happy with it, we can both sign the transaction and I can get paid. If it never shows up, you could go to the arbiter and you and she could sign the transaction and you can get paid. If I send you a perfectly valid miner, but you somehow dip out on the transaction, I can go to the third-party arbiter and she and I can sign the transaction and get paid. Around 2012, we have the notion of colored coins. So, you know, in Bitcoin land, we have this idea of unspent transaction outputs, which is very much like change. If I go into a store and I pay with $5 and they give me back $2.37 in bills and change, that's very similar to what UTXO is. So somebody had the idea, well, what if we had all of these different Satoshis or these different change units represent different assets on the blockchain? So for example, what if I created a gold coin and I colored some Satoshis gold, and then people bring me physical gold and I can store it in my vault and issue out these gold coins. They can sell them and trade them on a third-party market. And then when someone brings me back the gold coins, I can give them back the physical gold and I can basically uncolor those Satoshis. That's the idea behind colored coins. And then there could even be, you know, wallets that have different rules. So if you have like let's say a yellow coin and a blue coin, you can mix them and create a green coin, or then you can also ultimately separate them out as well. And then so the next natural step was, okay, if we're going to have all of these different assets and they're going to be digitized onto the blockchain, we need some type of exchange. We need some type of order book with buys and sells, that kind of thing, in a market. Wouldn't it be great if we could do this in a decentralized way? And that's the DEX, those DEXs, they're very popular and very powerful. And then the next idea, so now we're starting to get around 2014, which is when Vitalik starts working on Ethereum. But even before 2014, you see people talking about smart property. So imagine, for example, if I was throwing an event and I wanted to issue tickets to it and I just issued them as tokens on the blockchain, I could be confident that there was no counterfeiting because I know exactly how many I created. They can, of course, be sold and traded on a third-party market, similar to colored coins. When you show up to the event, you can just send me that token back in a transaction and I can just burn it or decolor it, basically, and then you can get into the event. The next idea is smart contracts. So, you know, a typical contract is just enforced by legal jurisdiction around the world. What if we were able to have contracts and they were represented as software and they were self-enforcing and either lived on the blockchain or somehow were dependent upon the blockchain? And then, of course, somebody took that all the way to the extreme level and said, you know, we know that corporations and organizations are sort of like these nested structures of different type of contracts and legal frameworks. What if we could represent all of that on the blockchain? People who own tokens or shares in that organization could vote. They could get paid back dividends or profits depending on how it was set up. And that's the idea of a distributed autonomous organization. You know, there's been several of those now. So, you know, just to give a sense, at the top there, you see Namecoin with the blue N, the blue circle with the white N. You see colored coins, the two orange C's. You see Omni and Counterparty Cash. So the reason I like this slide is simply that it gives you a sense that prior to Ethereum being created, if you just go back and sort of play it from 2010 to 2014 or so, there were a lot of people trying to use the BTC chain to represent different assets other than cash or gold, however you see it. So really the question then, I guess, is why did that not happen? What happened? And again, as best as I've been able to piece from history, there's really sort of three things that happened. So in Bitcoin script, you can have what's called a null data output, where basically you can just write arbitrary data to the blockchain using an opcode called opreturn. And it's very popular in Bitcoin Cash. We'll circle back to it. It's likely that most people in here have at least heard that term before. And that's what allows us to write stuff like memo posts to the blockchain, or that's how tokens are happening now. So initially, at least on the test net on BTC, it was 80 bytes. And at some point, they decided to decrease it to 40 bytes because there was this idea simply that, you know, transaction volume and writing stuff to the blockchain is considered spam in that community. So they decided to kind of cut that off. And if you look over in the right-hand column, you can see that an open letter and plea to the Bitcoin core development team. Again, I can share any links with anybody who needs them afterwards if you want to follow up. This is a real interesting article all the way back in 2014. So Counterparty was one of the original protocols that allowed people to issue assets on the blockchain. And they wrote this letter basically saying, look, we have a really nice protocol. It works today at 80 bytes in opreturn. But we recently noticed that that's been decreased to 40 bytes, and that really does break our architecture. we're able to re-architect, and we can use multi-sig and stuff like that to make it work, but it's not nearly as elegant. And we really would, we're playing with you guys not to do that, basically. So that's sort of the first thing I've identified, is simply the part of the blockchain wherein we write arbitrary data, which represents all these different assets, was decreased by 50%. The next one is disabling of opcodes. So anybody who's been around in the Bitcoin Cash community for the last several forks has noticed that we continue to turn on new opcodes. And several of them were turned off, but it's ones that you would think would be fundamental to having a very powerful scripting language, such as division and multiplication, left shifts and right shifts, ORs, exclusive ORs, numbers to binary, binary to numbers. All of these things were turned off in Bitcoin Core, BTC, years ago. And that effectively dumbed down the scripting language, which is what's happening under the hood. So that's another thing. They kind of dumbed down the scripting language, things which people were relying on to create and issue these other assets. And then finally, just, Vitalik and his team, it's not just Vitalik, of course, but his entire team and the people who support him and were part of that movement, they moved on. They realized this was not going to be happening in the BTC camp. They went and created Ethereum. And, obviously I spend a lot of my time working on tokens, because I really do believe tokens are the 100x multiplier that can take Bitcoin Cash from 1 to 100. I spend a lot of my time traveling around the world and going to hackathons, and I know, because I spend a lot of time on the ground, that tokens are not a solution that we need to force on the market. Tokens are a solution the market is asking us for. If you go to a hackathon tomorrow, most of the projects at the end of the weekend will be Ethereum or EOS tokens, because, like I said before, they allow us to take everything we love about the blockchain and apply it to all these different real world virtual goods. So in my mind, obviously not scaling BTC was a huge drop of the ball. It's at the very heart of what led to the Bitcoin Cash and BTC fork. But, I also feel like not enabling or encouraging Vitalik and or the other people who wanted to create tokens in the Bitcoin ecosystem could potentially have been just as big of a drop the ball as not scaling out the blocks. And it's simply because, how much great computer science and smart people and smart money are in these other ecosystems, which could have been in the BTC ecosystem. So that's kind of my high level of why tokens didn't happen on BTC as I perceive it. So now we're just going to go into the present, where we are now. So, the Bitcoin Cash fork, obviously this isn't the exact moment of the present. This has now happened maybe a year and a half or two ago. But, we've had several forks since then. Basically, a fork in our ecosystem is just a network upgrade. We have them every 6 months. So, fork is kind of a scary term, but really what it is a network upgrade. And we've had several. And so one of the things we've done is we've re-enabled a bunch of those old opcodes. So as I mentioned, division, multiplication, left shift, right shift, number to binary, binary to number, ORs, exclusive ORs, and I'm sure there are others that I'm spacing on right now, have all been re-enabled. We increased our block size from initially 1 to 2, then to 32 megabytes. So, 32 megabytes today is PayPal scale. So today, Bitcoin Cash has the scale of PayPal. So, nobody's going to tell you that PayPal doesn't have scale. So nobody should say that Bitcoin Cash doesn't have scale today. But on our roadmap, we have terabyte blocks. We want 10 billion humans to be able to do 50 on-chain transactions every single day. And we feel like that enables worldwide commerce, the Internet of Things, smart contracts, and stuff we've not even thought of yet. And, in the same way a megabyte might have seemed like a lot when most of the people in this room were kids, but a megabyte is not a lot today. By the time you load up a web page, you're loading a lot more than just a megabyte. A terabyte may seem like a lot today, a terabyte every 10 minutes, but because the pace of change is accelerating, and we have Moore's Law, and Moore's Law has a superset called Kurzweil's Law of Accelerating Returns, a terabyte will not be a lot, certainly within our lifetime, probably much sooner. And Bitcoin Cash has a bunch of exciting technologies like graphene, which is a block propagation protocol created by Gavin Andresen, the guy who literally took over the reins from Satoshi when Satoshi stepped away. And we have canonical transaction ordering, CTOR, which recently went live in our last upgrade in November. So we have a lot of emerging technologies which are going to enable us to have terabyte blocks and to scale out to worldwide commerce. And then lastly, we increased the op return size. If you remember, op return is basically what allows you to just write arbitrary bits of data to the blockchain. We increased it from 80 bytes to 220 bytes. And nearly immediately, maybe 3 months, 4 months after that, we just saw an absolute explosion in biodiversity of token protocols. And so similar to how I said in the beginning, some token protocols are going to make sense and they're going to flourish in their niche, and some of them will not make sense and they'll die off. I'm not entirely sure 100% of these are being actively developed right now, but these are ones I've identified which have happened since the fork from BTC and since, you know, re-enabling opcodes and increasing op return. And I'll quickly go over them. So SLP is the one I'm most active in at this current moment, Simple Ledger Protocol. And this is kind of like Colored Coins. It's based on UTXO. Beside that is Wormhole. So Wormhole was a fork of Omni for Bitcoin Cash, which was released by Bitmain last August in Hong Kong. Below that, to the bottom left, the green CP, that's Counterparty Cash. So that is a fork of Counterparty for Bitcoin Cash. To the right of that, we have Colored Coins. And that one, as I mentioned, is probably the very first token protocol on BTC back in 2012. It's been ported to Bitcoin Cash as well. Below that is Kyoken, which is a token protocol being released by the Bitprim team. I have a lot of respect for Juan and his entire team. They're doing some absolutely great work. Kyoken is cool because it draws a lot from Ethereum as well as EOS. So there are like, I think there might even be literally 20 or 21 validators similar to EOS. And that one's very exciting, but I know it's live on testnet. I don't think it's live yet on production. Right below that, we have Bitcoin Token. Bitcoin Token was a proposal which was released by Clemens, who is one of the co-founder of Yours with Ryan. Clemens is an incredibly sharp guy. Beside that, we have Tokeda. That was released by Ioannis Vimeros, I believe is how you pronounce it, from the Locad team in Paris, another super sharp guy. And then below that, we have Group. That was proposed by Andrew Stone from Bitcoin Unlimited. Initially, it was an opcode. That got pushed back very hard by the core Bitcoin Cash developers. He refactored it into a third transaction version. That also got pushed back. And I have heard recently that it's being refactored yet again into something called Supergroup, though I'll admit I don't know the technical details behind that. But I do, as far as I understand, that lives on. So I'd be interested to know more. And then beside that, we have Honeybaggers. So Emil Oldenburg, our CTO at Bitcoin.com, who's just an absolute wizard, was brainstorming on how to basically do group in op return. And there's likely others which I forgot here. And as I mentioned, maybe not 100% of these are actively being developed anymore. I'm not 100% sure. But the point simply being that the underlying technology, increasing the block size, increasing the op return size, re-enabling those opcodes, it really does sort of speak to developers to enable the technology to allow people to represent assets other than cash on the Bitcoin blockchain. And we see it in the same way that people tried to launch tokens before on BTC. As soon as we enable that technology again, all of these different protocols emerge. So real quick, again, I'm just going to breeze through this. It's likely everybody knows these terms, but just so we're on the same page. There's really two different types of tokens. And if you're launching a token, it's worth knowing the difference between a utility and a security token, because it could be the difference between having a very smooth launch and then finding yourself in some type of legal issues with investors, you know, a year down the road. So the first one is just utility token. And that's a token which is used within a company's product or service. And I've listed a couple here I'll go through. So BAT, the basic attention token, I'm sure you guys have been seeing all over Twitter. Brendan Eich is the co-founder of Netscape Navigator. He was the co-founder of Firefox. He stepped away from Mozilla and Firefox. He stepped away and created something called the Brave browser. And so basically his experience was, you know, he helped build the modern web as well as the modern web browsers, and he knows how ad networks can track everybody and what that does for users' privacy. So effectively, they wanted to flip that model and create something called the basic attention token, which allows you to get paid as you go across the web and or to pay content creators, basically to flip the model from you know, your attention and your eyeballs being sold to you being able to either pay for content you like and or being paid for content which you consume. And they initially did launch this on BTC. So as far as I understand, there weren't many tokens that actually escaped on the BTC blockchain. Of course, we all know Tether, and Tether was created on Omni, which became a wormhole on Bitcoin Cash. And as far as I understand, the very first initial basic attention token was launched on Omni as well on BTC. But, you know, when the scaling debate happened in 2015, 2016, it didn't work out. And they just shifted it over to an ERC20 token on Ethereum because, you know, they're pragmatic engineers and they're building a company and they couldn't get pulled into the scaling debate. I'll skip over quarters because I'm limited on time. The next one is make or die. So, you know, stable coins to me are very, very interesting. I predict that a stable coin will be the next missing part of the Bitcoin Cash token ecosystem which emerges. I know we're tossing around ideas at Bitcoin.com how we can help do one. And then I know there's been several other proposals which I have seen for stable coins and Bitcoin Cash. And the original version 1, the version 1 solution to stablecoin was Tether. So the idea simply is, what if we issued a token and we had a one-to-one backing of US dollars or whatever your fiat currency is in some bank account somewhere? And so every time we want to issue new tokens, we need more money in theory. And then basically this token can act as liquidity between exchanges and between users, and it will never sort of go vastly far above $1 or below $1 because it's kind of pegged to this big stack of cash we have in the bank. Well, as most people in this room probably know, there's no way to basically audit whether or not Tether actually has that money in the bank. So that's kind of not the greatest model. So now we're dealing with second and third generations of this idea. And I think, in my opinion, the best one out there right now is DAI by MakerDAO. And the way this works is you can basically encapsulate an Ethereum token in a ERC20. Let me see if I can get my thoughts straight here. Yeah, basically you can encapsulate your Ethereum in a smart contract, which allows you to create collateralized loans against it. And they have like a team of market makers who help keep it basically pegged at $1. If I remember correctly, as the market kind of went down over the last 3 or 4 months, I don't believe DAI has ever went below 90 cents or so. Now, there's a huge dialogue back and forth online. I'm sure you'll see it on Twitter and Reddit, whether or not stable coins make sense, whether or not they're possible, whether or not they're the ultimate long-term play, or whether they distract from crypto. Of course, I can follow all of those threads. I'm not saying they're the perfect solution forever, but what I am saying is one of the things merchants don't like is to be exposed to volatility. It's really hard for a merchant to accept crypto if by the time the person leaves the store, or certainly by the end of the day or the week, the value of what they got paid is either going to spike or go down in value. It's just a problem. They're business people. They got to make sure that all their ends meet. And so that's the value add that a stablecoin offers. You can on-ramp a merchant into our ecosystem and they can accept a stablecoin, and then they can be confident that's not going to lose value, basically. And when I was at a hackathon in Wyoming, maybe last September, October, there were 14 different projects which used DAI. And so it's absolutely incredible, and it's blowing up across the Ethereum ecosystem. And I do hope that we have something similar in the Bitcoin Cash ecosystem soon. Now, below that are security tokens. And of course, this is what most people think about when they think about a token, because we all know about token sales and ICOs, etc. So a security derives its value from an external tradable asset, and it's subject to federal security regulations. And then the question is, how do you know if your token is utility or security? Well, does it pass the Howey test? And the Howey test is it an investment of money? There's an expectation of profits from the investment. The investment of money is in a common enterprise, and any profit comes from the efforts of a promoter or a third party. So, for example, if I were to tell you that we're launching a Bitbox token and it's somehow tied into profit sharing, and then we did a token sale and you bought them, that would be a security because you're investing money and there's an expectation of profit based upon the work of a third party. So, it is true that most of the ICOs that were launched on Ethereum over the past couple of years probably fall into this bucket, but I do not believe the line that all tokens are securities. I very, very much believe that there are utility tokens. So that's that functionality right there. So there's some really cool stuff happening across the world to enable tokens. I have a couple examples here. So like I said, I recently went to Wyoming. There you can see Caitlin Long, who is an absolute rock star, and Tyler Lindholm, who's the first representative of Wyoming. She's from Laramie, Wyoming, which is where the University of Wyoming is, but I believe she was at Goldman Sachs for like 25 years. So, she's like from Wall Street, and she has a great internalization of that market. And her and Tyler and a group around them, the Blockchain Coalition, I believe is their name, are doing some absolutely amazing work. So last year, Wyoming passed, first, let me roll back. Wyoming is incredibly progressive. I didn't grow up there, so I would have not guessed that, but they have a lot of mineral wealth. So there's the greatest concentration of billionaires in the entire United States is in Jackson Hole, Wyoming. And they're very, very progressive. The very first woman governor was from Wyoming, and the very first woman voter was from Wyoming. And that's also where they created the legal framework for the limited liability corporation or company, the LLC, which if you're in the United States and you create a startup with your friends, you will likely file an LLC in Delaware. I've done several, but the framework was actually created in Wyoming. And so, you know, Wyoming has, it's got a small population of very smart people, and there's a lot of wealth there. And so they can move really quick when they want to. And that's what they're doing right now. They're trying to create Wyoming as the blockchain valley, if you will, instead of Silicon Valley, of the entire United States. And last year they passed 4 laws. I have them listed at the top 4. So the first 2, Wyoming Money Transmitter Act and Open Blockchain Tokens, basically those make utility tokens exempt from money transmitter laws, including people who create and issue those tokens. Below that, you have the electronic corporate records. So this allows companies and politicians, et cetera, which want to write their records to the blockchain for public auditability. This provides a legal framework for that. And then below that, they've created a new type of LLC, limited liability company, where basically you can have a parent LLC and then an infinite number of children LLCs, and the parent and all of the children are firewalled and encapsulated from each other. And you can actually issue a new LLC for every single purchaser of your token. So that's incredibly powerful. And then just this last couple weeks, if you guys don't follow them on Twitter, definitely go do that now. This last couple weeks, they just introduced several new laws, and I don't exactly know how the legal structure works in. I think these are 100% passed yet, but I believe they're in the final stages, where it's the digital assets existing law. So this basically aims to add clarity around digital assets in Wyoming. It offers custodian services through banks instead of just financial institutions, and then it treats virtual currencies the same as money within the state of Wyoming. So I like to point this out because the opposite side of this coin, of course, is the bit license in New York. So, you know, the bit license created by Ben Losky famously is slow and very expensive, and many commenters have pointed out that really it appears to be, you know, kind of like a roadblock preventing people from disrupting the financial services of New York and Wall Street, not something which is trying to set off a crypto revolution across the United States. So I like to point out sort of like the difference between what's happening in Wyoming, where they're moving very quickly to basically turn Wyoming into the blockchain valley, compared to New York, where they're doing as much as they can to basically slow down innovation in that space. And while I was there, I believe the company is called Active Ether, although I could be wrong about that. But there was literally a company that announced at that very hackathon that they were relocating from NYC to Jackson Hole. And when we were at that hackathon, they had all 3 gubernatorial candidates, so Republican, Democrat, and Independent, and I believe they had over $100,000 in prizes. So, you know, they're taking it very seriously in Wyoming. I know it looks like I'm extremely short there, but it's actually, they're very tall. So that's what's happening in that picture. I flew literally directly from Wyoming to South Korea and visited this place called Jeju Island. And this is very interesting to me as well. So Jeju Island is a semi-autonomous zone off the southern coast of South Korea. And they basically, similar to Wyoming, it's very small. There's a lot of smart people there. There's a lot of money there, and they can move very quickly. So they're trying to do something similar. I have Crypto Valley there. I think I called it Blockchain Valley in the previous slide. So they're trying to do the same thing. They want to be the Crypto Valley of all of the Pacific and Eurasia, basically. And they're doing several things, similar blockchain-friendly legislation, similar to the previous slide. And then they're also investing, you know, $176 million, it says here, over the next 4 years in startups. So I literally flew down there. We have our head of biz dev, Jen, who is there, who actually, I connected him with Caitlin so that she could help sort of school them in the victory that she just won in the United States. And so, you know, I mention all of this because I used to be at Trulia back in 2012 whenever we had our IPO. And the company, I believe, started in 2007 or 2008 by 2 guys there in the center who were MBAs at Stanford. You know, they went through several rounds of fundraising. They ultimately, we had an IPO. We raised $102 million. We went public on this NYSE. You know, you can see Pete got to ring the bell, but it was incredibly slow. It was incredibly wrapped in legal red tape, and it was very expensive. If I remember, Pete did like a CEO roadshow that lasted, you know, a year or so. We ended up having to work with a large Wall Street firm. I don't remember if it was Goldman Sachs or Bear Stearns, but, you know, this is very expensive. Launching an IPO on the New York Stock Exchange is basically not going to happen unless you're a huge company with a big legal team and a lot of money and a bunch of clout. In 2015, Trulia was ultimately acquired by Zillow for $2.5 billion. And, you know, that sounds like a great story. The company was about 8 years old. acquisition for $2.5 billion. That's awesome. That's a good Silicon Valley story. You can compare that, of course, with EOS. So, EOS launched as an ERC20 token on top of Bitcoin Cash, or I'm sorry, on top of Ethereum. I apologize. And, when they launched, they did not even have a platform. It was basically just a white paper. The team is completely decentralized and distributed around the world. I believe they're illegally set up in the Cayman Islands. And, they raised $4.213 billion just in their token sale before they started building out the technology platform. So, I like to compare these two things because it kind of just shows to me the old school and the new school. Like basically I am of the opinion that ICOs and token sales and STOs, whatever the acronym is, they haven't even started. So, some people will tell you ICOs are dead. Of course, I don't believe that. Everything is cyclical. Everything is seasonal. The pendulum always swings back and forth. We happen to be in this down market, so there's not a lot of focus in our ecosystem like there was just a year or two ago. We're also in the interesting place where all these legal frameworks are emerging. So, I mentioned Wyoming and Jeju Island, but there's also Malta, Singapore, Thailand, Antigua, St. Kitts. And so, there are places all around the world where they're trying their hardest to get a legal framework in place because they realize that if they enable this technology, it can take their country to an entirely new level in the coming wave of financial revolution. So, to me, token sales, ICOs, STOs, whatever you want to call them, they enable raising money at the speed of the web. So instead of us needing to have an entire legal firm, which allows us to, do a roadshow and try and ultimately go live on the New York Stock Exchange, we can just launch a token and we can raise a significant amount of money very, very quickly. And, depending on where you do it in the world, there's not much red tape at this exact moment. So, I think token sales are very, very powerful, and I want to do everything I can, of course, to bring them to the Bitcoin Cash ecosystem because that's where I focus. That kind of brings me to the stuff I've been working on most recently. As Hayden mentioned, the most recent project we launched is Badger. You can check out badger.bitcoin.com and go download it today. It works for Chrome and for Firefox. If you set it up, you can send me your address there. You can see it says on the left where it says account 1. You see a Bitcoin Cash address right below. That's a simple ledger address. If you send me either of those, I can send you some tokens to kind of get started. So in the Ethereum ecosystem, there is this browser extension called MetaMask. And again, if anybody has played around with any Ethereum or any dApps, you are familiar with the MetaMask because it's incredibly popular and it's been a huge catalyst for that whole ecosystem. So whenever Bitcoin Cash got the Tokambrian explosion started happening maybe 4 months ago or so, there was really this whisper that started going around between all of the different development teams. Everybody was like, we're going to need a MetaMask. We're going to need a MetaMask. And so the idea was there, and we were waiting to see who was going to do it. And ultimately, nobody did it. So my team did it. So we literally forked MetaMask. And basically, to back up there, before I joined Bitcoin.com, I was working on something called the Bitbox SDK. So, I'm a software engineer, and I have been now for a decade. And there's been several times in my career where the right tool set has, set off my workflow by 10x or 100x. And so it happened with Ruby on Rails, and it happened with Node.js, and it's happened several times. I was part of the HTML5 working group in college. Google paid for me to be a member of the W3C, and I'm an acknowledged contributor to HTML5 spec. And that was the first time I ever saw the right tool set can take your work to a 10x or 100x level. And so in my opinion, MetaMask is like the tool, or I'm sorry, I was still on Bitbox, I apologize. So whenever Bitcoin Cash launched, I was focused on it 100% the very first week after the fork. And I was doing, I had a 3D printer company called Clone before this, and I was doing smart contracts on Ethereum. And as soon as Bitcoin Cash came out, I realized that there was just nothing even close to the development tools which existed in the ecosystem, in the Ethereum ecosystem. Nothing like that existed in Bitcoin. And years ago, before the fork, I had a vision to do something similar to Bitbox. I wanted to do developer tooling for Bitcoin Core, but I just got so turned off by the scaling debate that I shifted all of my Bitcoin Core to Ethereum, and I shifted all of my energy to Ethereum. So I was pretty into the Ethereum ecosystem. but I've always been a bigger fan of Bitcoin. Bitcoin has always resonated with me. I understood Satoshi's vision from day one. I can appreciate how critical money is to the human condition. So as soon as Bitcoin Cash launched, I was all about it. And I decided I was going to take the opportunity to basically create the developer tooling ecosystem for Bitcoin Cash. And that journey started with Bitbox SDK. If you go to developer.bitcoin.com, you can see it there. So that's a software developer kit for Bitcoin Cash. It's fully featured. It does everything from mnemonics, HD nodes, addresses. We support all the transaction types: pay to pub key hash, pay to multisig, pay to script hash, null data. You can write to the chain with op return. You can do address conversion, network detection. And it's tightly coupled to rest.bitcoin.com, which is another service I've launched. So what that is the entire Bitcoin Cash JSON RPC over HTTP. So basically what that means is you don't have to run your own full node. Anybody who's tried to create Bitcoin apps knows that it's kind of a pain in the butt to have to spin up your own full node and maintain it and keep it secure and all that stuff. You can outsource that to us. We have rest.bitcoin.com, and Bitbox and rest.bitcoin.com are very tightly coupled. So if you go today and start using the Bitbox software developer kit, it automatically speaks to our full node with no further setup. Whenever you configure it, you can point it to your own full node if you do happen to run your own full node, but there's really no reason to. And the idea behind Bitbox is simply that you can go from idea to app 10 times faster than the competition. That was what I wanted to attack that goal, and we've definitely accomplished that. In the past week, we've had over 1,500 downloads of the Bitbox SDK. We've had over 1,300 downloads of our token SDK. It's called SLP. We've had, just last night, literally in the last 24 hours, we had 600,000 requests to rest.bitcoin.com. So, you know, these are real developers out there in the real world that are building stuff on the Bitcoin Cash ecosystem. And, you know, they're building it today and they're launching it tomorrow. And I have several really cool projects I'm going to point out here in a second. But in my opinion, you know, the Bitcoin Cash developer ecosystem is really hitting an inflection point. And there's everything's sort of coming together and gelling in a really good way. And we've got some very, very exciting projects on the horizon. So the missing piece, sort of the catalyst behind it all, in my opinion, is Badger. And so we think about Badger like a web browser, because we think about Bitcoin, and when I mean Bitcoin Cash, of course. We think about Bitcoin Cash as significant as the web. So, you know, if you had went back and told somebody in the 70s or 80s, in just 20 years, everybody in the world is going to have a supercomputer in their pocket. There's going to be ubiquitous high-speed wireless networking. Everybody in the world is going to have their own social media account where they can post whatever they want, and they'll have an equal voice with the New York Times or CNN. Somebody 20 years ago would say, I don't believe that vision. Number one, I don't believe there will be supercomputers in your pocket. Number two, I don't believe there will be ubiquitous high-speed bandwidth everywhere. And number three, why would everybody even need their own social media platform? We already have the New York Times. We already have CNN. But it's the difference between top-down and bottom-up. So, you know, the previous generation, and when most of us were kids, there were only so many sources of information, right? There's only so many newspapers. There's only so many only so many radio stations. There's only so many magazines. It's very much a top-down type model. But that's been flipped, of course, in our lifetime, because now everybody has their phone with their camera. Everybody has their WordPress account. Everybody has their Facebook and Twitter account. So we live in this bottom-up society where anybody can tell their story, and the access to information is completely leveled. The barrier to entry is zero. I can go out today and I can create a new media organization like CoinSpice, for example, and they automatically are on the same field as Vice, and they're automatically on the same field as the New York Times, because that's the new model. And we see Bitcoin Cash that way. So in the same way that the web democratized information, we believe that Bitcoin Cash is going to democratize money. And that's very, very powerful. I often ask people, you know, what's more critical to the human condition, money or the web? And you will always get a different answer. And that's one of those good questions. But, you know, you could certainly argue that money has, you know, obviously it's been around with us much longer than the web. And there are people around the world who don't necessarily use the web, but they certainly are impacted by money in one way or another. So we view Bitcoin Cash as incredibly transformative, in the same way that if you were running a web browser from 10 years ago, you wouldn't get the modern experience of the web. If you're not running a super modern wallet, you're not going to get every single thing that Bitcoin Cash offers. And Bitcoin Cash is just such a rich API with so much innovation that we feel like we want Badger to be like the best wallet in the entire ecosystem. And so we are currently, let me see, yeah, so currently we support Bitcoin Cash and tokens, as you can see here. As I mentioned, if you download this, please send me your address and I will gladly send you some tokens so you can try them out. Or of course, I'll send them to Hayden. You can follow up later, either way. Another big paradigm shift we're seeing is around identity. So, you know, kind of walk it forward. In the beginning, people didn't have a lot of digital identity. Then maybe there was this notion of email and our identity was tied to our email. Now we have a proliferation of websites with usernames and passwords. Of course, the problem being that, number one, most people reuse their username and password. Excuse me. And so that leads to, you know, if somebody cracks your Facebook account, they can instantly get into your Twitter account. So of course, the solution to that is to use something like LastPass or 1Password. If you're not using a password manager, you should. You can generate a unique username and password for every single site. But then there's a subsequent problem, and that is simply that Facebook owns all of your data. You know, Google owns all of your Gmail. There are AI, you know, there are machine learning teams at Facebook who probably know more about myself and my habits than even I do, because they have so much of my data, including where I'm at with my phone, geolocation, who I'm talking to in private messages, who likes my stuff, when I upload images, where they're tagged, stuff which I don't intuitively keep track of because I'm kind of living my day-to-day life, just going through the flow. But they're not. They've got big data and their total information awareness, and they're keeping track of everything. And now they've got really smart PhDs out there doing deep machine learning, pulling out your future actions, knowing what you would want to buy before you even know you want to buy it, that kind of stuff. And, you know, that's perfectly fine. That's their business model. But we believe that the story of the singularity is really the story of the individual becoming asymmetrically empowered against the state and the corporations. So we want to do everything we can to empower personal liberty. And what I see happening is, in the same way that, you know, Bitcoin emerged right at the right time, you know, Chancellor on the brink of bailouts, 2008, financial crisis, quantitative easing. It was the right idea for the right time, kind of thing. Now we're getting into this era of total information awareness and turnkey police state. We know in the United States that they're building like massive data centers in North Carolina where they're basically tracking every single bit of every bit that goes across the network. They're storing it there. Even if it's encrypted, they flag it. So whenever they crack that encryption with quantum computers in 10 or 20 years, they'll be able to go back and see what you're talking about. We know the Great Wall of China and the Great Firewall, I should say. I recently was in Beijing hanging out with the Bitmain team, and as soon as I landed, you know, the web didn't work. I couldn't access Gmail or Google or Twitter or Facebook or my bank or Venmo or anything without a VPN. So, you know, we're living in this era where we're seeing personal liberty being curtailed in a digital way, and we think that identity is the next big paradigm shift. And so there's this new protocol called Cash ID in Bitcoin Cash, which allows you to sign in and out of websites using your Bitcoin Cash keys. So no longer do you have to even have a username or password. It's quite literally the keys that exist in your wallet. And, you know, we can see this technology emerging into something like, let's imagine you have sort of like, you are in complete control over all of your data at all times. It's always encrypted. And then you have, let's say, like concentric circles of trust around yourself. And you can say, yeah, I trust Hayden a lot. I give him access to level 1. I don't really know that person. I only give her access to level 2. And then I definitely don't trust that guy at all. Only give him access to level 3. And you can kind of imagine dynamically being able to share data with people at different degrees based upon how much you personally trust them. We see this technology moving in that direction. And the first sort of step of that is Cash ID. So this is already live in Badger. I myself this week got demoed 2 different apps which are getting ready to launch that allow you to sign in and create your account literally with your Badger wallet, and then you can just sign in and out. And it's similar to, if anybody has ever used Trezor, or it's a Bitcoin and Bitcoin Cash and most crypto feature, you can actually sign a message from an address. So imagine, for example, if I tell you, oh yeah, I'm a total Bitcoin Cash whale, I've got all this Bitcoin at this address. And you're like, no, you don't. I can go to him, sign a message, you know, with your name and your date, and cryptographically prove that I own that. Or, you know, I can't do it, in which case you can call me out and say, if you don't sign it, then I don't believe you. And so this is kind of that idea mapped over to identities. So you can go to a website, they can issue you a challenge, you basically sign it with your Bitcoin Cash keys, and it will authenticate you into the website. And you can pass back and forth metadata. As I mentioned, this is all live now. If you go check out my Twitter address, Twitter handle, CG Cardona. Just today, I retweeted an NPM library for setting this up on your server, and then we have an API in Badger which allows you to do this on the client side. Of course, I'll point you guys at all that documentation later. And then another thing we have is the Badger button. So as I mentioned, MetaMask is a fork of, Badger is a fork of MetaMask. And MetaMask has this API called Web3, which you may have heard of or maybe developed on in the past if you're a developer. And what Web3 is it's basically like this glue layer, if you will, that kind of glues the web to your smart contracts. And it's incredibly powerful, and it's been a big catalyst and an enabler in the Ethereum ecosystem. And so we're porting that over to the Bitcoin Cash ecosystem for Badger. We have spec'd out a bunch of it with the Enome team, and then there's still some more work to do. We're implementing it now in Bitbox. And so our first iteration on that is our Badger button. And so today we have an entire toolkit to basically create this for you. You can have, obviously you can customize it to look at however you want. We support basically all of the national currencies, dozens and dozens of them. You can show it in different denominations. You can have multiple outputs. So for example, imagine you're a content creator and you host your content on a third-party site, and I go watch it and I want to pay you $1 or something. When I click the button, 5% of that can go to the content, the person hosting your content, and 95% can go to you, or you can set it up however you want. This also supports writing to the data to the chain with op return, which we just pushed live today, and it supports tokens as well. So, you know, if you want to click a button and send people Bitcoin Cash or send them tokens. But what's really cool is, you know, the button is just kind of like the UI layer. What's happening under the hood is the Web3 BCH API, which we're working on, which doesn't have to be clicked, doesn't have to be mapped to a click. If you're a web developer, you know there's a bunch of different DOM APIs. Like if you hover the mouse over something, that'll fire an API, or if you tap on your phone, that'll fire an API call. You can map our Web3 API to any of the different DOM events. We just have a button as our first example, because obviously Money Button was very popular last year, and it kind of showed the utility of that. You know, we believe that Badger button is even more powerful because, number one, it's 100% open source. Number two, we support tokens as well as BCH. And number three, we don't only support the click event, we support any of the underlying DOM APIs. So we suspect this is going to be very, very powerful. Hayden, shout out to you. I believe was the very first person to ever put it on a site on the CoinSpice site. He wrote up a nice blog post showing people how to basically copy and paste their way to victory to host it on their own site. He and I worked together late one night here in Tokyo, like 2:30, I think it was, to have it always show a US dollar, basically, so to calculate the right Satoshi amount. So respect to you for that, Hayden, but we're getting a ton of adoption. I think my next slide is some sites that are already supporting Badgers. So, you know, this is just over the past couple weeks. So Satoshi Dice, you know, Satoshi Dice is legendary. It goes way, way back. I genuinely remember Satoshi Dice from years ago. So it's a great honor to me that they're actually now using the Badger button. And if you go check it out, it's such a great user experience. So if you go to Satoshi Dice right now and, you know, scan it with a phone from your wallet, scan the QR code, send it. When you do it with Badger button, it's like 10 times faster, if not more. You can play the game, see the result, and either pay from your wallet or get money sent to your wallet if you win or lose in about a second or two. I mean, it's very, very fast. It really does sort of underscore what a great user experience it is to map, you know, the DOM API to your Bitcoin Cash wallet. The next one is SideShift. So I think Hayden might have mentioned this, or I don't remember if I said it or Hayden said it, but I know somebody said, like, this could be the killer app for Badger. So if you guys know about Shapeshift, Shapeshift was created by Eric Voorhees, who, you know, is a great dude who goes way back in the scene. Shapeshift allows you to basically go and say, I want to shapeshift my, you know, Litecoin to my Bitcoin Cash. As a matter of fact, the very first week of the Bitcoin Cash fork from BTC, if you remember, I said I had shifted all of my BTC into Ethereum. And so at that time, I think I had a little bit of BTC left, but mostly I was holding Ethereum. That very first week after the fork, I shifted 100% of my Ethereum and BTC into Bitcoin Cash, maybe like 3 days after the fork. And I did that because, of course, I really did believe in the vision of Bitcoin Cash. But it wasn't available on any exchanges. There was nowhere you could go to get an order book. There was no market. There was no depth. But I was able to use Shapeshift. And so I personally have known the utility of Shapeshift, you know, from the original BTC BCH fork, Well, recently, Shapeshift announced they're adding KYC, which is Know Your Customers. So I don't know exactly what form it's taking. I don't know if they're going to ask for passports or your state ID. I don't know, but that's going to kill the utility for a lot of people, because most people don't want to have to sign up and send them their license or their passport, and that's completely fine. So recently, Andreas Brecken, who is also a legend in the space, was working with Paul Svork, I believe is how you pronounce it, on Drive Chain. And they were doing cross-chain atomic swaps. I believe the very first one was BTC to Tether. And so recently, Andreas launched Sideshift.ai, which is like a non-custodial, non-KYC Shapeshift, if you will. And he implemented Badger Button to allow you to basically pay for the transactions. And so simply because I personally know the outrageous utility of Shapeshift, and I know now how that utility has just been killed because of the KYC. It's no fault of Eric. It was just a single point of failure that the government was able to put their finger down on. I see Sideshift as the potential there being absolutely huge. And the fact that Badger Button is there to basically pay for the payments, it's pretty exciting. I agree. That could be a killer app for Badger Button. Very excited about that one. The next one is bitcoinfiles.com. There is a ripoff site, bitcoinfiles.org, I think, that's for BSV. So if you land on that one, that's not the one I'm talking about. I'm talking about bitcoinfiles.com, I believe is the domain. So this was created by the Simple Ledger team. And what this allows you to do is basically upload content to the Bitcoin Cash blockchain. If it's less than 5 KB, or if it's greater than 5 KB, you can upload it to the IPFS, which is the Interplanetary File System, and you can store the hash on the Bitcoin Cash blockchain. So if you see my Twitter account, you'll see this. My picture is me leaned against this big stone wall, and basically I'm at the Imperial Palace here in Tokyo, and they have this huge old wall. I think it's like a buttress maybe for the military. I'm not exactly sure what it was back in the day, but it's old. And to me, it looked like big blocks. That was kind of what I thought when I saw it. So I recently uploaded this picture to IPFS and stored the hash on the Bitcoin Cash blockchain, paid for it with Badger. It was like 90 cents, I believe, something like that. The next one is crave.xyz. So this is pretty cool to kind of zoom back out and go back to that cash ID from a couple slides ago. The same guy, Jonathan Silverblood, and then Rob from Tipperbot recently released another protocol called Cash Accounts. And so anybody who remembers Handcash, which is now on the BSV chain, but last year was BCH, their big innovation was the handles. So let's imagine my username is $Gabriel. It's not on Handcash, for what it's worth, but imagine it is. Let's just say my username is $Gabriel. So their idea was simply QR codes, NFC, it's too complicated. What can we do to have mass adoption? Well, email works even for non-technical people. What if we did something similar in Bitcoin Cash? Okay, well, instead of an @sign, let's have it be $. Okay, that works. So they arrived to this thing called handles. And in my opinion, it really was a huge UX improvement. In my opinion, it's at the very heart of why Handcash had the success that they did. It's just such a good UX. But the problem is, number one, if you misspell Gabriel and send money, you send money to someone else. It doesn't go to me. There's no checksum, or there's no way to kind of confirm that it actually maps to the correct Bitcoin Cash address. And number two, they own your handle effectively. They are in fact a third party. And so if they wanted to redirect your payments, or if they wanted to censor your payments, I'm not saying they have or they will, but I'm just saying they could, simply because they're a third party and they own your handle. So Rob from Tipperbot and Jonathan Silverblood basically created this protocol called Cash Accounts, which you may have seen around. I think cashaccounts.info might be the URL. And you can write to OpReturn on the Bitcoin Cash blockchain your username. So for example, my username is CG Cardona #122. And super high level, the way it works is the 122 is like the block count, I believe, after the very first block that it went live. And then if two people try and register the same username in the same block, there's like there will be so CG Cardona #122 dot, and then like a little collision hash at the end. So people can have the same username multiple times in the same block, and you'll be able to distinguish them. And then finally, your checksum is represented as in little emojis. So, my emoji is a bread symbol, but any of the emojis are valid. So it's real easy to visually identify that is in fact your username and that it's correct, because the emojis are not going to be the same if there's a collision hash. So, Cash Accounts is huge. I have a lot of respect for Jonathan Silverblood and Rob. They created Cash ID and now Cash Accounts. And because I believe identity is so critical, I have a lot of respect for them. But crave.xyz is a site which allows you to go and basically reserve your username in future blocks. And then they're basically watching the blockchain, and every time a new block happens, they'll check and see if somebody wanted to register, and they'll create their Cash accounts username for them. And of course, you can pay for that with Bitcoin Cash using Badger Button. Greenpages.cash is basically like a merchant directory which recently launched, and we have marcocoino.bitcoin.com, which is very popular. We recently baked it into our bitcoin.com wallet, so you can literally see physical locations all around you where you can spend your BCH. But Green Pages is another one which is launching, and you can basically tip all of the different merchants with your Badger Button. And then below that is Pay Button, which is another sort of tipping button platform, which is being launched by Super Nerd recently. Not only does it have something like a Badger Button, but it also has QR codes, and then it has like a meter which shows you, like if you're trying to fundraise 2 BCH, for example, it'll show you, you've raised 75% so far, and that kind of stuff. It uses Badger Button, at least for the button functionality under the hood. Yesterday, I was checking out gateway.cash, which is another button service which is emerging. I clicked their button in their docs, and it launched a Badger modal. So I'm guessing they're using our Web3 BCH API under the hood. Just today, I got demoed a Bitcoin Cash token exchange. This is going to be launching in the next few days, so I'm sure you guys will see it, but this is really cool. You can create your account and sign in with your Badger wallet using Cash ID, and then they only support Bitcoin Cash and tokens which were created on Bitcoin Cash right now. And that's really exciting. And then yesterday I was demoed a site which is similar to Stack Overflow. So if anybody's familiar with Stack Overflow, it's basically like a question and answer site. It's incredibly popular. I saw somebody launching one, but they have Bitcoin Cash bounties. And of course, you can create your account and sign in with your Badger wallet using Cash ID, and then you can pay using Badger Button. So those are just some sites. This is all in the past couple of weeks. So as I mentioned, our development community is hitting an inflection point. There's so much cool stuff that's happening right now. If you kind of project forward just, 1 month, 2 months, 6 months, a year, there's a lot of really, really powerful stuff happening on our chain. And then on our Badger roadmap, we have BIP70, which is like a payment protocol between merchants and consumers. It ensures that you never overpay or underpay. It lets you know that they for sure, the merchant received it. There's no way that you can be man in the middle. It offers change addresses so they can send you back money. It's very, very powerful. We support it in our Bitcoin.com wallet. We're going to be supporting it in Badger as well. As I mentioned, cash accounts. So you'll be able to go across the web, and instead of seeing a QR code or a cash address, you'll just see CG Cardona #122, and you can click on it, and Badger will know that that should be sent to me. After that is Cash Shuffle. So again, there's so many different paradigm shifts that are happening. One of the things I always mention is that I'm a big fan of Ray Kurzweil in the book The Singularity is Near, and one of the things he mentions is that if you measure the pace of change from 1900 to the year 2000, and you sort of set that as your baseline for the pace of change, in our century, we'll experience 20,000 years worth of paradigm shifts if you measure the pace of change from the past century, and that's simply because the pace of change is accelerating. And so if you have the right eyes to see, you'll see paradigm shifts sort of everywhere around. And I kind of identify a paradigm shift as something which makes something an order of magnitude easier or cheaper, faster, quicker, some breakthrough which takes you 10x or 100x in some direction. And so privacy, even though I'm hyper-focused on tokens because I believe they're the 1 to 100x multiplier, privacy is another really big one, which can help set Bitcoin Cash apart, and it can help, give human liberty around the world. As I mentioned, we want to have human liberty in this kind of total information awareness society. So Cash Shuffle, the way it works is there are coin mixers. Everybody knows about coin mixers. You can kind of mix your coins up with other people. Cash Shuffle is a little bit different than that. You combine your transactions with other people, and it gives you obfuscation, basically. So we want to enable this in Badger. We'll have a little toggle switch so people can turn it on or off. It'll be optional. ZQuest from Coinbase and John Fukeball are absolute champions. As far as I know, they're literally doing a professional security audit of the Cash Shuffle code base, and it should be live within the next couple of weeks, I believe. And then we're going to be implementing it into Badger. Of course, multi-sig is pretty basic, but we're trying to have featured parity with our Bitcoin.com wallet, and so multi-sig is a big one. And then we want to be able to create tokens from within Badger. So right now we have an SLP SDK, which is a superset of the Bitbox SDK. If you're familiar with Bitbox, when you run SLP SDK, you get 100% of the Bitbox functionality out of the box, and you also get all of this ability to create and mint and send tokens But right now, you've got to be a developer, and you've got to kind of do that at the code level. We want it to be as easy as clicking a GUI inside of Badger, and we feel like, Badger and SLP and Bitbox, they can be the catalyst which can sort of help set off this Tokambrian explosion. And so real quick, the future, where we headed, I really do like this video. I'm going to go ahead and let it play. It's 1.5 minutes. I will kind of just let it do its thing. So what this is this shows token sales from January of 2014 through August of 2008, of 2018. So, this isn't even the most up-to-date, but this just kind of gives you a sense of what I mean when I mean the Tokambrian explosion. So you can see right there, it says Ethereum 19 million. I was around at that time, actually. I did not partake in the Ethereum crowd sale. I was just a student in college. I didn't really have any money. I didn't have great tech chops at the time, but I was aware of the scene. And they were the first token sale that I remember. They raised 19 million. They kept it in BTC at the time. Around this time, June of 2016, you see the first distributed autonomous organization, the DAO. So, they raised $168 million. And this kind of started getting people's attention, because people were like, that's a very significant amount of money. They did it how? Through tokens on Ethereum? Oh, okay. And once people realized that raising money via tokens on Ethereum was a valid model, you just see an absolute explosion in different tokens, token ideas, token protocols, token cells. And then you can see as it plays itself out through August of 18, $28 billion in token sales over the past 4 years in Ethereum. And we missed out on that in the BTC ecosystem simply because we didn't enable tokens. So when I talk about the Tokambrian explosion, this is exactly what I mean. And I would like to see something similar to that happen in the Bitcoin Cash ecosystem over the next 4 years. And that is it. Thank you guys so much. Thank you, Hayden. There's my Twitter, CG Cardona. Same thing on Telegram, Gabriel@bitcoin.com, developer.bitcoin.com. Please reach out to me. My job is to on-ramp smart people and smart developers into our ecosystem, so I'm more than happy to do anything I can to help out. Thank you, Hayden.
Thanks very much for the presentation. It was really good to get an up-to-date insight on the latest Bitcoin Cash developments and things that are being built, because you're right at the forefront of everything, of course. So was there anybody in the audience who wanted to ask Gabriel a question about anything you just heard? Because I'll hand it over to you. Just talk directly into it.
Yeah, no worries. Thanks, man. Appreciate the presentation. Now, you're probably not going to like the question, but and I don't hold anything of Bitcoin or Bitcoin SV. Went to a meetup the other day, hearing sort of two sides of the story. Forgetting this whole cult of personality thing, if just on like the technical side, you're probably in the best place to talk about this. What would you say to people who are, the bewildered crowd out there who are just confused as to which of the two to go between? Where do you see them differing? It's probably not a great question, but why do you not like SV, or why is that might be doomed to fail, or what are your thoughts on the whole split there? Thanks, man.
Yeah, so good, definitely good questions. So, in the same way that I think the BTC and the BCH fork actually was, even though I call it the divorce because it was very, very unpleasant at the time, ultimately it was the right thing to happen, because the BTC tribe and the BCH tribe sort of have a different idea of how this should digital gold settlement layer, or is it cash for the whole planet? In my mind, whenever we forked away from BTC, there was this idea, kind of, we needed strength, number one, and then there was the idea, sort of like just the generic idea, this should be cash for the planet. But the different camps have definitely diverged, and the vision for where they're going, being like a government-friendly coin, it's not something which resonates with me, and it's not because I'm anti-government or anything like that. It's more that I personally, I see the story of our lifetime. I see the story of the singularity, the accelerating pace of change, as being the story of the individual becoming asymmetrically empowered against the state. So, if you think about like Anonymous, the hacker group Anonymous is the perfect example. Just one or two people who are really, really good at what they do are asymmetrically empowered against even the military industrial complex, simply because the tools at our disposal in our lifetime are so outrageously disruptive that the people who internalize them and learn how to wield them properly are very, very empowered. And, you know, crypto did that with people. People who got in early are billionaires today, you know, the more wealth than kings of previous generations. People who busted their butts their entire lives can't even touch the kind of wealth and influence these people have. So, you know, to me, just the idea of the government-friendly coin doesn't totally resonate with me. But, you know, I think from a technical perspective, I think the approach they're taking is naive. And, you know, a lot of people think that I'm taking a shot at them, and I'm not. Daily, I will say, this is my naive implementation of this solution. And what I mean by that is, I'm an engineer, I solve problems for a living. So somebody comes to me and they're like, this is the problem I need you to solve. So I'll quickly mock up a prototype, and it's not perfect. It doesn't hit every use case. There's edge cases. It's my naive implementation, if you will. But it's something we can brainstorm on, and we can kick back and forth, and we can further iterate on. You know, to me, simply removing the block cap or removing different throughput layers, it's not the right solution. And we saw this last year when Peter Risen and the Bitcoin Unlimited team spun up the Gigabit testnet, where they were basically trying to create gigabyte blocks. I'm sorry, the Gigabyte testnet, where they were trying to create gigabyte blocks, and they realized that there are bottlenecks in the software which break down at a certain threshold. And until we refactor and parallelize the software, etc., it doesn't make any sense to remove these different limits, and they could in fact present different attack vectors or something like that. So number one, I just think from an engineering perspective, the approach is naive. And I think they're being bit by some of their choices. Just last week or so, they increased their op return size to 100 kilobytes, and within, you know, one day or so, somebody uploaded child exploitation pictures, if you will, to their blockchain. And now that's something they've got to deal with. There's now the legal question is, if you're hosting a full BSV node, is that the same as hosting child exploitation photos on your website, that kind of thing. So, you know, like in the Bitcoin Cash world, we work in concert with the IPFS, the Interplanetary File System. And, you know, recently Chris Pacia from OpenBazaar and the BCHD Bitcoin Cash full node in Go have created something similar to the Lightning Network. It's not bidirectional payment channels, but it's unidirectional payment channels using IPFS and Bitcoin Cash. So, you know, I just think that their engineering approach is naive. That's pretty much where I'm at with it.
Sweet. Any other questions from the developer here? Any other questions, guys? Otherwise, okay, another one for you. Here we go.
Thanks, man. What are you most excited for about the future of Bitcoin Cash?
I mean, the thing I focus on is tokens, of course. And I know I sound like a broken record there, but I really, really do believe it's a 100x multiplier. So, you know, I think that's the, you know, like, of course I get paid in Bitcoin Cash, quite literally. That's what I draw my salary in. So, you know, everybody wants the next bull market to hit. And it's kind of like, what brings the bulls? Well, you know, I believe that the pump days of simply the hype are over. I think that was probably the boom from, you know, a year and a half ago or whatever. I think the next big bull market is going to be driven by utility. And so, you know, I think that I'm just kind of excited around tokens simply because I feel like they can act as a channel for capital to enter our ecosystem, yields and securities and utility tokens. So again, I think that the thing I love about Bitcoin Cash, the reason I was so turned on from day one, is it's simply playing out the experiment of creating larger blocks and enabling larger op return, which is just something we didn't see played out in BTC. And it was just so frustrating as an engineer to go through, you know, 3 years of the same conversation over and over and over about the scaling debate. We just played that experiment out, and to me that was so fulfilling. So I'm just excited to continue to scale out the blocks. I do believe that we can have terabyte blocks using CTOR and graphene, and then I also just believe tokens are going to be an absolute explosion. So I hope and I believe that in the next 12 months, which is a big timeline, but it will happen in the blink of an eye. We all know that. I believe in the next year there will be large token sales in the Bitcoin Cash token ecosystem, and I hope they use the software that I'm building right now. And so I hope that acts as a catalyst for both the bull market and, more importantly, to send these signals to the outside world that we have a very healthy and vibrant technology stack. We have a lot of smart people, and there's a lot of smart money in our ecosystems, so that we can attract more and kind of hit this network effect where we can grow exponentially.
Awesome. So, yeah, if you wanted to find out more about what Gabriel has got to say, we've actually got some good discussions with him hosted on our YouTube and podcast site as well. So go check that out. And yeah, I believe you have another meeting or call to get to now, so we'll let you go. But thanks very much for your time. And yeah, once again, it was a great presentation. And I'll probably give these guys a quick demo of the Badger wallet and button in use right now. So
yeah, and just shout out to Hayden, man. Thank you so much for everything you do for Bitcoin Cash. I really do mean it. And so I'll send you some more tokens right now. You can spread around. And yeah, anytime I'm open to do this again. So let me know.
Sweet. Thanks very much, man. I'll catch you around.
There you go. Cool.